Okay, now we're going to move to the debrief for problem E3-29A, and that's located on page 173 of your textbook. So we're taking a little bit of a twist here. Instead of doing the schedules, the income statement, now we're going to be doing some journal entries. So we've been asked to do a number of journal entries. The first one is to record the purchase of materials on account. So when you see the words on account, that means they're not paying cash. Most businesses would not pay cash. They would be purchasing things on account. They would have credit arrangements with the companies that they're purchasing from. So you're purchasing your materials, so you're going to debit your raw materials, you're going to credit accounts payable. So when it's bought on account, it's an accounts payable. The next thing that we're looking at is the raw materials. So they purchased $174,000 worth of raw materials, and what you're being told here is that $152,000 of this is actually used in production, and the rest is just used in general overhead. So what you're going to do here is you're going to credit your raw materials, because now that you've started the manufacturing process, you want to credit raw materials. You're going to move it, just think about it as taking it out of your storage room, moving it onto a production line. So you're going to use, of your $174,000 that you're taking out of your stock room, you're going to use $152,000 of it in the actual manufacture of the product, and then $22,000 is just general use in making the various products. The third journal entry is to record the manufacturing labor and salaries. So we're told the total wages payable is $225,000, and that's been broken down into two categories. So work in process, so here's the $190,000 of the wages that can be specifically traced to particular products, whereas other of the wages payable, you think of your supervisor's salary and janitorial staff, that kind of thing, you're not directly tracing it to a particular product or job, so that goes into overhead. So that's your indirect labor, that's the $35,000 there. The fourth one, number D, is to record the $20,000 of depreciation on the plant and equipment and the utility bill. So here, depreciation, if it's on the plant as opposed to the administration offices, it's going to be part of overhead. So accumulated depreciation, a credit, your utilities payable, credit of $10,000. The total of those two, $30,000, is going to go into overhead. And E, here you're asked to record the $81,000 manufacturing overhead was allocated to specific jobs. So here, throughout the period, as overhead is incurred, it goes into your manufacturing overhead, as you can see here. So now, when you are ready to make that allocation, what you want to do is you want to remove it, so you're going to credit your manufacturing overhead, and you're going to debit your work in process to get that into your inventory. So that's requirement 1. So requirement 2 is you want to look at the manufacturing overhead. What is the difference between the amount incurred and the amount allocated? And we'll just scroll down here, and we can see that we have the three amounts that we have allocated, which we've just done in our journal entries, and the amount allocated. So these three amounts actually add up here to $87,000. And So that's our actual, but what we've allocated based on that predetermined rate is 81,000. So we've got 6,000 that has not yet been allocated out, and it will be allocated at the end of the year. You do have to allocate out the 6,000, and how that gets done will be addressed in future problems. So that concludes E-29A.